Hi everyone, good morning and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 28th of January. Now into today's session, we've got a degree of support that's starting to come in for equity markets. It's potentially a little bit of consolidation after what has been a hectic few days on major markets. We've seen, obviously in the wake of the Federal Reserve meeting on Wednesday, a lot of volatility, sharp rises in treasury yields, and that has helped to strengthen the dollar significantly once more. Dollar moving to multi-month highs and has significantly impacted through major currency pairs. Euro dollar breaking down sharply, and also we've seen significant support levels being broken on the likes of cable and the Aussie dollar as well. So big moves we are seeing still through these forex major currencies. Sharp moves to the downside on commodities, certainly the precious metals anyway, although oil continues to be supported well. So today's session we're looking at some more US data. We've got inflation on the cards as well with the core PCE this afternoon, also the Michigan sentiment numbers as well, but we're still seeing that dollar strengthening. But the question is that move that continues higher on treasury yields going to continue to drag volatility through equity markets is the question. So the charts we're looking out for today, I'm looking at the Aussie actually today because we've seen a break of key support, but it's coming now to the crucial level of support, and a test of that could now be seen. We're also looking at the gold price, sharp move lower. To be honest, it's come back through a few key levels now on gold, and it's now sort of looking more ranging on a medium-term basis. SP500 futures as well has been so volatile in recent days, but it's starting to find a bit of support. So let's have a look. So onto the Infinox MT5 platform, and we can start off with Australian dollar, which broke this downtrend in the past week or so, but an acceleration lower that we have seen on Aussie has now broken that key support at 70.80, which really does now open this 69.90 level of key reaction low back from December. And if we sort of go out further onto the weekly chart, we can see that this is a really important level of support. That is a support that on 69.90 that came back in 2020, and what we've seen is if this support goes, this is a massive level to the downside. So this is a really important moment on Australian dollar. Will this continue lower? Will it threaten that support and close below that? Because if it does, it really does open the downside. So that is the key question for the Australian dollar at the moment. Below 69.90 is a really important level there. But what we have got overhead is the resistance also now forming. We've got 70.80 as that resistance. Old support turns into new resistance. We can see the basis of that actually overnight, where we had that initial breach and then a consolidation around it, but then went again yesterday late into the session. So we're starting to see that the momentum still building to the downside. Can Aussie survive this 69.90 level of support? Well, it certainly looks at the moment as though it is open for that test, but that's the question. Will it break down? So onto the gold chart. Well, again, another uptrend which has been broken. So this sharp move to the downside on gold, last two sessions in a row, really big selling pressure through gold, has really dragged that back below the 1800 mark, and breaking that latest key reaction key higher low of the recovery really does now mean that gold turns into a neutral outlook once more. You see these moving averages rolling over. That's 21 and 55 day moving averages. We've got the momentum indicators, which are not a million miles off towards the bottom of where we've seen. I've got these green lines in, which basically is 60 to 40, which is sort of ranging. And again, we are essentially ranging on gold on a medium to longer term basis, and it's back to the middle of that range. So the next test to the downside is 1782, and we've got resistance at 1805. So essentially we are again once more range bound on gold price and looking for the next real signals. A little bit oversold on the 4-hour RSI, so maybe a degree of support coming in, but essentially range bound for now. And finally on S&P futures, the acceleration lower we saw in the last couple of weeks, but it's been really volatile in the last few sessions, really mixed signals on those technicals. We've seen sharp moves to the downside, rebounding consistently pretty much on every session. And yesterday, look at that long-tailed doji, pretty much a long-tailed doji candle, you could argue, that is a really uncertain candle yesterday that just suggests that we are basically starting to find a bit of support and consolidating. But is there any recovery? Well, not yet on the momentum on the 4-hour chart. You'd want to see the RSI above that 50 mark consistently to suggest a decisive recovery. It's not really seeing that, although the moving averages are now starting to flatten off a bit. But very mixed signals across this S&P 500 futures at the moment, and you can see these wild swings that we get intraday over the last few days. This is on the hourly chart. So you got the initial support around that 4,300 mark, and the resistance certainly starts to build around the 4,410 up towards 4,440. And yeah, that's it's a really much very much a neutral situation at the moment, but very volatile still for that chart. So thanks for watching this video. I hope you found it informative. We've survived another week of big volatility. So I'll be back on Monday, where we'll be just looking ahead to the next key week on the market moves, because we've got 3 central banks and the payrolls report as well. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much, and good luck in your trading, everyone.